Alright, so this is going to be the last video of this series on the risk management. One, this is basically going to be the deciding factor, and with some facts and figures, you're going to know where you stand currently and what you need to achieve in order to go full time if you are looking to treat this as a profession for the rest of your lives. So, we are going to consider a bracket of 10 trades. Let me just write it here. This means that we are considering a bracket. This is like a bracket of 10 trades. Trade number 1 to trade number 10, we are going to go into deeper results, and we are going to conclude how and where win rate actually signifies the importance of being consistent with trades or not being consistent, and where the full-time traders stand in correspondence to the part-time traders or the ones who are just market participants. Alright, so just consider this to be 10 trades bracket, which means that in a series, for example, it's a month and you have taken 10 trades. So we are going to be going into the details of those 10 trades, from trade number 1 to trade number 1, trade number 10, and take a look at the win rate as well. And we are going to consider 1 hour to be equivalent to 1% of the account risked. Alright, if you do not know what the term R stands for, then you have to watch the previous two videos I have posted on this playlist on the risk management series. Once you have watched those, then you can come to this one, because this is the final piece to the puzzle in solving the complete aspect of risk management to becoming a full-time trader. So already we have a 10 trade bracket and we have a 1 hour risk of 1%. I've already prepared this chart, and this on this side, on the left hand side, you have your win rate. On the right hand side, you have two columns. One states 2R, one states 3R. This means that there's one column that is going to be targeting 2R trades only, and there's going to be one column that is going to target 3R trades only. A 2R trade basically looks like something like this. Alright, just as a random, this is the risk reward ratio written here. This is a 2R trade. Basically, if you just look at it like this without any numerical values, this is what a 2R trade looks like. And on the other hand, this is what a 3R trade looks like. Alright, 2R means that you have risked 1% of your account to gain 2% back, or you have risked 1% of your account to gain 3% back. This is explained in much better detail on the previous video, so make sure you have watched those. Now coming on to this, alright, for a 20% win rate. 20% is essentially where the beginners start trading. It is also a very extreme to the lows of this win rate, because 20% is quite low even for a beginner. But we are going to go from 20% to the extreme 80%. 80% and beyond is not possible unless you are very highly skilled, but that is also very impossible to achieve, because most of the accounts you see on Twitter posing with a win rate higher than 80% are mostly LARPs, and nobody can actually achieve a greater win rate than 80% being a full-time trader. So let's begin with 20% win rate. At 2R, you have a negative 4R return at the end of 10 trades. What this means that for trade number 1 to trade number 10, you have a walkthrough. Alright, your result on the 2R series for this setup, alright, over here is negative 4R. How is this possible? Alright, 20% means that you would be winning 2 out of 10 trades. Alright, so since you are targeting a 2R setup, 2:2 would equal at plus 4R. On the other hand, you have 8 out of those trades left which you have lost. Risking 1% on each, you would be losing all 8 of these, and you would come out at negative 8R. Alright, sum of these, you have a negative 4R. Right, let me just write like that. You have a negative 4R return, which is for the 2R series. Similar to the 3R series, you have a negative 2R return. Same thing all over here, a walkthrough of the trade number 1 to trade number 10. Instead, over here, you basically, in this walkthrough, have a negative 2R return. How is this possible? Again, let me explain again. You would be winning 2 out of your 10 trades, but this time your return is this one, plus 3R per trade. So for 2 trades that would be 3 into 2 plus 6, and again you would be losing 8 of the remainder trades, which would come out at negative 8. Net of that is negative 2R. Alright, for this is for the 20% win rate series. For people with a very low win rate at 20%, meaning that they are only winning 2 trades out of the 10 trades they take in a week, in a day as a scalper, or in a month. Alright, so the return is basically negative on both sides, whether they are targeting 2 or 3R. I'm not going to exceed 3R because generally as a full-time trader you would always be trading between 2 to 3R setups. Anything above as a full-time trader is considered magical. Basically it's a gift, because when you are trading lower sizes, you would be getting 4 to 5 hour to 6 hour, even 10 hour trades in some cases, but that is only possible because your setups start to look something like this. You see that there's a 10-hour target here. There's only a very tight stop of 0.18%. This is your increasing your RR ratio, but the problem here is that you would only be risking smaller amounts. Let's say you're a beginner with a $1,000 portfolio, risking 1%, which is $10 of your account in this trade. Would you either you lose $10 or you win $100, but you wouldn't be losing just $10 because this stop is so tight. What about all the slippage in the market? If the market slips this 1 hour, only this measurement here can exceed towards this here as well. So this negative 1 hour can turn into negative 3 hour. This is the problem with having tight stops with the market slippages if the market is volatile. On the other hand, if you are someone with 6 figures, let's say $100,000 portfolio, you would be risking 1%, which is $1,000 per trade. Now, would you be taking trades like these with a $1,000 risk? No. You would be going back to essentially what is the mean of full-time trading between 2 hour to 3 hour setups. So this is why I'm considering only these in this table as well. Alright, so with the 20% win rate series, you have a net return of negative 4R or negative 2R. Either you are targeting 2R setups or 3R setups. Basically you're at a loss at the end of 10 trades, but this is your learning phase. Alright, negative 4R means that you have lost 4% of your wallet, and negative 2R means you have lost 2% of your wallet. When you're starting, obviously you're going to be starting with a lower margin, and as time goes on your portfolio increases and your risk increases as well. So do not consider negative 4%, negative 2% to be a big thing, because there are people on the other side which lose this amount in just a single trade, which we call gamblers. All right, but with facts and figures you can see that you can retain yourself, but within this entire process, taking 10 trades every time and with a 20% win rate, you would be learning a lot of things. This is basically how beginners turn into full-time traders, and you learn with experience. How I learned as well, my win rate was 20%, but just for the sake, for the extreme of this chart, we are considering 20% to start. Alright, so consider this phase. If you have a 20% win rate, consider this phase to be nothing more than a learning phase. Do not trade on demo. Demo does not teach anything, except it teaches no emotional management of the trade. Okay, trade with real money, lose it, come back again, but risk less, such that you are gaining experience when you are already starting out. Now the chart goes on from 30, 40, 50, 60, 70, 80% win rate. Alright, for the 2 hour series, as you can see, whenever the win rate increases by 10% in the 2 hour setup series, your return at the end of 10 trades increases by plus 3R here. Negative 4 to negative 1 is plus 3R, negative 1 to plus 2 is plus 3R, plus 3, plus 3, plus 3, plus 3. For the 3 hour series, this goes in values of plus 4R. From negative 2 to plus 2 is plus 4, plus 4, plus 4, plus 4, plus 4, plus 4. Here, every time your win rate increases by 10% on the 2 hour series, your net return increases by 3R. Here it increases by 4R. Alright, remember that we are talking in terms of at the end of 10 trades. Okay, now this is what I have marked in green, and this is basically where the full-time traders stand. This is the lower extreme, and this is the upper extreme for the facts and figures. This is where majority of the full-time traders stand, between the 40, 50 and 60% win rate, depending on how much grip they have over the market in terms of reading price action. On this lower extreme, you can see that at a 30% win rate, just going from 20 to 30, let's assume you have just entered the market, you have a 20% win rate, and a little time has gone by, and you have come to 30% win rate. You are now winning 3 out of 10 trades instead of 2 out of 10 trades. At a 2-hour series, your net return is only negative 1 hour now. Previously, it was negative 4 hour. So with just a 10% increase in your win rate, you have had a massive change of plus 3R in your portfolio. So instead of losing negative 4% of your wallet at the end of 10 trades at a 20% win rate, now you're losing only 1%. But on the other side, at a 3R series, you are gaining 2R, which means you are gaining 2%. Remember that we have considered 1R to be 1% in this case, alright? See how much it has changed. At negative 2R, at 2R series here, you have a negative 4R return, and at 3R series here, at 30% win rate, cross check this, it goes from negative 4 to plus 2. Alright, there's a big change from a 4% loss to a 2% gain. Now this is where majority of the full-time traders stand, meaning that they are either winning 4 out of 10 trades, 5 out of 10 trades, or 6 out of 10 trades. Alright, and you can see the numbers here, how much they have changed. Alright, from this perspective, look at the upper perspective and look at this middle one. Alright, so if I'm talking about myself, I stand somewhere between 50, 60 and 70. It is very rare I go to the extremes of 70. Depends on the market. If it's really good and I have basically all the read on the market, I'm executing all my trades correctly, then I'll exceed towards 70%. Otherwise, I stand between this range. So at the end of 10 trades, this is the lower extreme for me. I'm either between 50, 60 or 70. Alright, so this is majority of what full-time traders stand in. Let's consider the example of myself, that I am in the 50 to 60% range. Alright, at 50% with the 2-hour series, let's just delete all of this, go all over again. Okay, we are considering the 50% series. 50-50, easy to understand, right? Lose half, gain half. A bracket of 1 to 10 trades. Alright, and we are considering the 2-hour series for now. 50% win rate means that you would be losing 5 and you would be winning 5 trades. At the end of 5 winning trades at 2R each, considering this is the column we are considering, let's consider this 2R. 2 is to 5 is equals to plus 10R. Alright, okay. And with 3R, it becomes plus 15R. Now this is for the wins. Alright, you have lost half of them, so half of them would be 5, so negative 5 on each, negative 5 on this, negative 5 on this. Your net result is plus 5, and your net result here is plus 10. Now notice something, notice this change. This is a plus 5, this is a 2x change. If you are talking in terms of x's, it is plus 5% of the account here, it is plus 10% of the account here. Now from a general perspective, if you have never done these figures before, you would just say, oh, alright, it's 2R, oh, alright, it's 3R, it doesn't make a difference, it's 2 or 3. Now you can see that it makes a big difference. It's almost 2x difference over here, if I can confirm it from the sheet as well. Okay, alright, at the 2R series, you're gonna have a net gain of plus 5R at the end of 10 trades, and at 3R series, you have a net gain of plus 10R. This is a big change, this is a 2x change. Alright, so let's assume that you have a win rate of 50%. 50%, just by the name of it, just by how it sounds, it looks bad. If someone is a full-time trader, people don't believe that they are winning a 50% of their trades, so they are good. They consider it's bad. The problem with people is that they do not have any knowledge, and they basically do not have any facts or figures, which I have demonstrated in front of you right now. So if you know someone who has a 50% win rate, but they're at least transparent, there's a thing between having a low percent win rate and being transparent as well. You need to follow people who are transparent. It doesn't matter if they have the low win rate, it doesn't matter if they have a high win rate. You will notice that most of the people with high win rates are not transparent, while the people with low win rates are profitable and transparent as well. These are the people you must be following, and this is proven with the facts here that at a 50% win rate, targeting 2-hour setups each, you have a plus 5-hour gain. Coming back to the example of being a full-time trader, and if you're trading 6 figures, a $100,000 portfolio, and you're risking $1,000 per trade. Now with just a 50% trade, assuming you have taken 10 trades in the whole month, you have won 5 of them, targeting only 2-hour gain per trade. You have a net return of plus 5-hour. That's plus $5,000. Plus $5,000 on a $100,000 account is a 5% gain. And leaving aside percentage, $5,000, just assume, compare it to some other job. Is a job better going 9 to 5, or is having a 50% win rate and winning half of your trades at targeting 2-hour setups is better, sitting from your home at the ease and freedom of yourself, trading whenever you want, and knowing you just need to take 10 trades this month, you just have to win half of them. You're confident in yourself, you have a proven track record, and you'll be consistently making $5,000 every month on a $100,000 portfolio, which is a 5% gain. Again, a 5% gain is considered less for some people, because these some people are people with smaller portfolios in the market, and they do not understand that full-time traders are not people that are trading $1,000 portfolios. They are trading 6 to 7 figure portfolios, and for them a lower win rate, a lower return is actually big in terms of how they are managing their financial lives. Now let's go to the higher extreme, which is the 70 and 80% win rate. This is basically the beginner's luck. So what happens here is that I'm going to again draw it over here. This is going to be the last segment of this video. It is going to cover beginner's luck. We started at 20% win rate, and we are over here at 80% now. When someone begins trading, they start at, let's say, assume over here, they directly jump towards here. This happened with me as well. Since I started trading with 2000, which I lost 50% of it. Then I came back to $1,000, and that is where my entire journey started, from going to 1,000 to having a 0.5 million net worth. Alright, I had a jump from this area towards this area. This is basically in psychology, trader psychology, this is called beginner's luck. What happens is that you enter the market, you lose it all, and then you start to pick up pace, and basically you start winning. You get confident in yourself, and it is being proven by the records. The market is easy to trade, and basically you're revolving around a 70 to 80% win rate. You're targeting high RR setups between 9 to 10 R. Your risks are low, but your returns are high. Basically you are inside the beginner's luck period. As soon as if you have escaped this period and you're starting to move towards the phase of full-time trading, let's represent it by FT, full-time, you start to go opposite. At one point you go back to where you started from. This is where, in terms of psychology of trading, this is where you start to question yourself. Should I be continuing this as a profession? Am I good? Was it just luck that I was playing with? Should I be continuing? Should I just go back to a job? This is basically where you have the differentiation between a market participant, represented by MT, and this is a full-time trader. This is basically where the decision gets made, if you're going to be a market participant or you're going to be a full-time trader. Market participants do not realize this factor of what's happening with them, and they just start further gambling, and basically this is what leads to losing it all. On the other hand, full-time traders, they are a little bit knowledgeable, and in terms of statistics and proven facts, they know these things from the beginning. They know it's going to happen, and they are already prepared for it. Alright, and they continue with risk management. These people do not continue with risk management, they get wrecked. While these people, they continue with risk management. They know all of these things in their minds. They don't need to draw charts like I just drew for you. You can take a screenshot of this if you want to save it, but they have this thing already printed inside their minds. This is basically what means having risk management in your DNA now. Alright, these people know that, and they continue to go on to become full-time traders. They accept that their beginner's luck period is over. They are going back towards break-even phases. They have the option of continuing this profession, or they have the option to gamble and lose it all. It begins a slow progress, but eventually you go back towards becoming a full-time trader if you're following risk management. Alright, so coming back to beginner's luck, You were talking about beginner's luck in this period where you're winning 8 out of your 10 trades. 8 out of your 10 trades is a very very big thing. It's almost close to being impossible if you're in talking in terms of proven track records. 10 trades and you're winning 8 of them. For example, there are 10 days and you have traded 10 of them, a trade each day, and you've won 8 of them. Consider another thing that between these 10 days, you have a normal Monday where price basically sweeps the lows and highs of the week. You have a Friday where there's a closing of the week. You have Saturday and Sunday within that week where there's no volatility for crypto, and there is no forex basically for those who trade forex because the markets are closed. And between those weeks, you could have news events like NFP, FOMC. Now, just considering these basic concepts, can you imagine for someone to have an 80% win rate who trades between 6 to 7 figures? For smaller accounts, it is possible because here the aspect of psychological enforcement and psychological pressure comes into play. When you're trading with a smaller portfolio, let's say you have a $1,000 portfolio and risking $10 per trade, even if you've lost it all, $1,000, your life doesn't blow up. $1,000 is nothing for your entire life. While on the other hand, if you're trading 7 figures, $1 million, and you lose $1 million, basically on the gambling perspective I explained in this area, your life is basically ruined. There is almost less than a 1% chance you can even make it back by trading full time day trading once again. So this is where beginner's luck lies, and it moves in the opposite direction when you are pursuing full time trading. And just to be aware of yourself, that when you're following people, pay attention to their win rate, their returns, and how much they are transparent with their trades. It is a guaranteed fact, and I'll bet $1,000 on this if you can bring me $1,000, $10,000 on this if you can bring me someone right now from Twitter who has an 80% to 90% win rate and trades a 7-figure portfolio. No one, there's no one exists in the crypto space on Twitter that has such a track record. It just looks like, because we aren't going deep into facts and figures, it just looks like someone is really good and someone is really bad. Because when someone starts going on a losing streak, let's consider this example, winning 2 out of 10. For the first 8 trades, you have lost all of 8 of them, alright? Okay, no, let's go into this one, 40%. For the 40% means that 4 out of 10 wins, alright? For the first 6 trades that are losing ones, you've lost all of them. Now, if you're following someone and they've lost all 6 of their trades, what's going to be your first judgment of them? They're a bad trader, alright? But you do not know what kind of proven track record if they have. Now, and you know these figures at a 40% win rate. If this person wins the last 4 of these, at 2R he has a plus 2% return, at 3R he has a plus 6% return. See how much you need to know before you comment about people on Twitter and basically traders in general, because people who trade full time just didn't become full time overnight. There's a lot of things like these deep stats figures that goes into becoming a full time trader, and this basically marks the end of the series on the risk management. Now you know how your win rate is in correspondence with your 2R to 3R setups. Do not go beyond 2 to 3R. This is not natural. Going beyond, you have unreasonable targets, you have too many tight stops, you get wicked out of positions, you get tilted. Just go with natural 2 to 3R setups, whether they are on the lower time frame or higher time frame. I'll give you an example of my own trade right now from here, a setup that I've prepared and I'm looking for it to fill on WooChart. Alright, this is the setup I have prepared for myself as a swing trade. It's a 3.3R trade, 8% stop loss, 26 to 27% gain. It's a swing trade. I'm planning for it something like this: retest on the trend line, start continuation up on the weekly SR resistance, and this is basically the big SR flip with a breakout. This is a 3R return. I'm either gonna lose 1% and I'm either gonna win 3%. And considering I have one of these win rates, every month this changes with how the market performs. If the market is good, obviously the win rate is going to be good. Not always, but depends how much read you have on the market. Some people perform better in poor conditions because the market ranges. Some people perform better in trending conditions because the market trends in extremes from lows to highs, highs to lows. Price basically volatility is really high. It depends person to person on what sort of knowledge they have about trading. But in conclusion, If you want to go full time, have this thing in mind. You're not going to go full time, you're going to go from a process of having a low win rate to an extremely high win rate and going back to the break even. Remember the process I explained over there in this part right around the right corner. You can rewind it or watch it again. That you will be pushed from a high win rate to a lower win rate back within your career at some point, and that is where the decision of a life comes into play, whether you are going to accept where you are and continue with trading with risk management, or you're going to let greed and emotions take over and eventually lose it all and become one of those 99% of people of the market that we call market participants, or you become full time, which we call the 1%. Alright, thanks for watching, and I'll see you next week in the new series starting about volume profiles.